Good evening. I'm Dr. Fred Rouse, the Real Money Doctor, and it's currently just a few minutes before 7 o'clock on Thursday, the 11th of June. And I want to touch base on today's events that affect the way you get, protect, and enjoy your money, your life, and your retirement. The question for today is it up to the governors to protect you? Well, I'll get to that in just a few minutes. Now, we've been starting today since we started this thing back in March sometime with the daily number of COVID cases just to see where we're at. And right now, okay, the U.S. has reached another milestone. It's a lovely nation. Right now, we have over 2 million cases right now, 2 million diagnosed cases of COVID since this got started. That's another 18,000 since yesterday. The deaths right now at 113,561. That's another 800 or so since yesterday, 835 actually since yesterday. That's a lot of people that died. That's twice the number that died in basically 14 years of the Vietnam War. And there were major protests in the streets because of the people that were dying in that war. Major protests in the streets at that point in time. I know because I was back there way back when. Okay. But 113,000 people have already died since March, basically. A lot of people. Now, New York State has the highest number, still has the highest number of cases. Diagnosis, 380,000 cases. They're up about 670 cases thereabouts since yesterday. Their deaths right now are 30,500. That's up about 75 since yesterday. So they're making some improvements. Again, this is way, 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 way better than what happened in early March and April and in May. So New Jersey still has the second number highest cases, 165,000 cases. They're up 470 cases since yesterday, and they had an extra 66 people die yesterday for a total death count right now of 12,443 people that have died. Illinois is the number 3 spot. California is at number 4. Massachusetts, followed by Pennsylvania, Texas, and Michigan for 8. Florida is at the number 9 spot, and we round out the top 10. The top number of cases diagnosed so far is still with Maryland. Now, obviously, the cases have been coming down, but the numbers, overall numbers, keep growing as more people are diagnosed with these things every day. The number of hospitalizations have also dropped off. Again, mostly, okay, in the states on either coast. They've dropped off on both sides of the coasts, okay? But it's the center of the country that things are happening in, and people are still dying, okay? They're still rising, okay? The states in the center of the country that, you know, for a while thought that nothing was happening to them, things are happening now. Now, this is happening in all 50 states because all 50 states have reopened to some degree. There's still no treatment, and there's still no vaccine that's going to be readily widespread available for use this year. That's not going to happen. Okay? They're going to have vaccine, but it's not going to be tested, basically. But we'll get to that in a couple minutes. There's more news today on the money front. Another big day. Yesterday was sort of a big day. Few announcements with the Fed and Mnuchin. Today, the Dow made it number 3. 3 days of losses. 3 straight days of losses right now. Okay, and it took its biggest one-day loss today. Right now, the Dow closed back at 25,169 today. They were up at 2,700 in that range for a while. But again, you don't know what's going to go on with that. Now, despite what the analysts have to say, there's generally really no rhyme or reason to what the market does. People like to think there is, but you know, they're just grasping at straws. Might as well have a Ouija board, okay? Because you can have a dozen analysts saying one thing, and these people are paid major dollars for their opinions. Major dollars for their opinions. You're looking, you know, mid 6 figures for some of these analysts to come up with their opinions. And you get another dozen saying completely opposite things. So that really makes it challenging for normal people, you and I. Okay, we can't spend hours and hours trying to research the various stocks and companies for the major opportunities, the hidden gold that they all talk about. And in the end, over time, okay, all those analysts really don't do any much better than just throwing darts at a board. Most of the time, over a period of time, they actually do worse than the market does in general. Now, the market response this week could have had something to do with the outlook from the Federal Reserve yesterday, when they said it intends to hold its benchmark interest rates near zero through 2022, just to help the economy recover from the COVID crisis. Could have something to do with the central banks, okay, yesterday, Wednesday, that they said the economy is going to shrink 6.5% in 2020. It's not a good number. With millions of people out of work and a growing number of Americans feeling severely cash-strapped, okay, the historically low borrowing rates means that loans are cheaper. And that's great if you can actually get the loans. Credit card rates are coming down now. They're at a 4-year low, whole 16.01%, if that's really supposed to be a low, from a high of 17.85% when the Fed started cutting rates back in July of last year. Now, they also acknowledge that the U.S. is in a recession, but the stock market just continues to reach higher highs, except for the last 3 days. Okay, as conditions worsen, credit card issuers have begun to start closing accounts and lowering credit limits, particularly on those accounts where they feel that there's a greater risk of becoming delinquent. Now, the banks are being tight with all lending right now as they try to really adjust to uncertain times, okay, with the economy. They're not certain where they're at. And again, bankers have to justify, they can't just give you a loan. They have to justify it on paper so that when somebody reviews their loan 6 months to a year from now, or they go to sell the loan, that, oh yeah, that was a good loan. They don't know who you are. They don't really care who you are. If the numbers don't work out, the numbers don't work out, you don't get the loan. And they've been tightening things up. Now, at the same time, okay, mortgage rates are substantially lower, but really that only benefits just a few folks. Okay, the average 30-year fixed rate is right now at a record low of 3.47%. However, some lenders have actually stopped lending completely on refinancing options and jumbo mortgage payments programs due to the new risk in the market from the mortgage bailout program. Nobody wants to get caught at this point in time. They came up with the CARES Act. Now, credit is tightening, even though rates are at record lows, okay, which should mean, you should get money really easy. And it would help a lot of people if they could, but the banks are really tightening the credit up, and so are the credit card companies. Now, very few people can actually take advantage of those lower rates because of all that tightening. Now, the Fed by itself has no direct influence on the deposit rates, because if you got money somewhere, it's probably sitting in the bank right now. And those rates tend to be sort of correlated to the changes in the federal funds rate. So when they lower the rates, the idea is it gets passed down eventually. It's like the trickle-down economic theory. Yeah, it doesn't exactly work, especially if you're on the bottom. Okay, now, according to the Federal Deposit Insurance Corporation, the average savings account rate right now is a mere 0.06% or even less. Now, yesterday, Treasury Secretary Mnuchin said that he would seriously consider more direct payments to individuals in the next phase of the coronavirus rescue legislation, adding that the fund should be targeted to help sectors struggling to reopen, including hospitality and tourism. Well, that's nice. That's what they were supposed to be doing before. Okay. And he said definitely believed that another round of federal payments, okay, would be needed, okay, including measures to create jobs. Congress so far has passed 3 coronavirus bills totaling about $3 trillion, including the small business PPP loans and the direct payments to individuals and some money to healthcare providers. and the Federal Reserve market has, backstopped a lot of that stuff. Now, we still have a significant amount of unemployment, and we're going to need to look at doing something there also, is what he said. And I think we're going to seriously look at whether we want to do more direct stimulus payments again to stimulate the economy. I think this is all going to be something that help people get back to work. So the Treasury chief, he's the one who really negotiates all this stuff, at least so far as what's been seen. The White House sits back. Normally you'd have the White House and the direct people working with the House on this, but that hasn't been the case. For some reason, the Treasury chief himself has been negotiating with the House. And they've negotiated most of the program so far with congressional leaders. And he's open to repurposing some of the unused funds, because what happened was some of that money that was lent out in the PPP program was returned because some of the companies were uncertain as to the terms, if it was actually going to be forgiven or not. And they didn't want to get caught short on things. So they just gave the money back they didn't need to begin with, but they applied for it anyway. What a surprise. Right now, there's about $130 billion in unclaimed PPP funds that could be used to rebuild businesses damaged by recent protests over police brutality. And Mnuchin said that he would consider that idea. He cautioned again against rushing into a fourth bill as the economy starts to reopen. But some sectors have been slow to reopen, including restaurants and travel-related industries, and they may need more help. Okay. He went on to say that small businesses and many big businesses in certain industries are absolutely going to need more help. And again, there's a fourth bill floating around out there, but Mitch McConnell's in no rush to push another fourth bill. Democrats in the House say, hey, a lot of people that were supposed to be getting money, that need the money, haven't gotten it so far. And the cities and states, okay, who've been hit really hard with the shutdown because they've got no tax money coming in, they're going to have some problems, and they're going to have some major layoffs. Right now, you're actually seeing layoffs in hospitals, of all places. They burn these nurses out in the ER and ICU, and they're laying them off on the floors. Okay, amazing things happen. It's the country we live in. And that brings me to the question for the day. Is it really up to the governor to protect you? Now, to help curb the spread of coronavirus, the U.S. basically shut down in the middle of March. They shut down retail stores, restaurants, public spaces, all closed to prevent gatherings of people. And they're asked to stay inside, and shelter in place and stay-at-home orders were all over the place. Now, recently, businesses have started to reopen. States have started to lift a lot of lockdown orders, but some states, okay, technically never really went into lockdown at all in the first place. 6 states, never issued shelter-in-place orders. Let's see what's happening now with those 6 states. As one of only 6 states that never went into a lockdown, South Dakota has continuously ranked highest on WildHub's survey of the states with the fewest coronavirus restrictions. This is because it's the only state that never mandated a statewide closure of bars and restaurants. Now, the state has already lifted the limitations on large gatherings and only recommends wearing a face mask, rather than requiring it. They recommend it, but it's not required. Now, according to South Dakota Department of Health, okay, the state has had just over 5,600 total coronavirus cases, which has resulted in about 70 deaths right now. In downtown Little Rock, Arkansas, the Governor Asa Hutchinson questioned the prospect of enforcing a statewide stay-in-place order. Okay, he questioned that back in early April, calling other states' orders just an illusion. Some businesses were closed for a time, though, despite the no shelter-in-place order. However, starting on May 18th, large indoor venues, including movie theaters, concert arenas, and amusement centers, were allowed to reopen in the state, operating at 33% capacity. The first post-pandemic concert was held in Fort Smith, Arkansas, on May 18th. To date, the Arkansas Department of Health has reported nearly 10,300 coronavirus cases in the state. which have resulted in over 160 deaths so far. And despite Iowa having healthcare professionals petitioning for statewide stay-at-home orders, Governor Kim Reynolds refused to do so. However, Reynolds did sign an executive order on April 7, closing non-essential businesses until April 30th. Well, on May 1, restaurants, fitness centers, and malls were allowed to reopen at 50% capacity once the order expired. Since May 28, bars, salons, movie theaters have also reopened at 50% capacity. Currently, Iowa Department of Health reports the state has seen just over 22,500 positive cases and 630 deaths so far. Now, like its sister state, North Dakota steered away from issuing any real official statewide shelter-in-place orders. Governor Doug Bergman closed some businesses in April, but reopened bars and restaurants, salons, athletic facilities, movie theaters, and more on May 1 through an executive order. Now, the New York Times reports that 2,900 COVID cases in the state and over 75 deaths as of June 10. And the Grand Forks Herald, it's one of the local papers there, reports that following reopenings, North Dakota has had the highest number of confirmed cases for a single day on May 21, with 134 new cases. And Nebraska never issued a statewide shelter-in-place order either. But they did issue a directed health measure which restricted certain non-essential businesses for a while. However, according to the state health department, all counties, including Dakota, Hall, Hamilton, and Merrick, are all open in phase 2 right now of their reopening plans. This means that bars, restaurants, gyms, salons, wedding venues are all allowed to run at 50% capacity. And general gatherings of fewer than 25 people are allowed. Now, as of June 10, the state has nearly 15,900 positive coronavirus cases and 190 deaths so far. The highest rate of new cases for a single day was in May 7, with 677 new cases. Now, Wyoming Governor Mark Gordon issued a plea on March 25 asking citizens to stay at home whenever possible. He never issued an official order, though. He never issued a statewide shelter-in-place order. He just asked people to stay at home if it was possible. His pleas came with public health orders that closed schools, certain businesses, and prohibited gatherings of 10 or more. However, those restrictions have lessened as time has passed, and as of May 27, gatherings of fewer than 25 people are authorized at this point in time. Salons, restaurants, bars, gyms, movie theaters, daycare centers were allowed to reopen as of June 1. The state of Wyoming has seen 760 positive cases so far for COVID. 210 were probable cases in addition to that, and then 17 deaths as of June 10. And that's according to the State Department of Health. So what's all that really mean to you? Now, as you can see, as more and more states continue to open parts of their economy, we're getting a glimpse of what life is going to look like in the new, not quite so post-COVID environment. The federal response was totally abysmal to non-existent to begin with. Back in January, February, it didn't happen until March when they even acknowledged that things were happening. Then they shifted almost everything they could to the governors, more so than anyone ever thought a governor should have to handle. Remember, governors were going crazy trying to get testing supplies. And the administration absolutely refused, to put that under federal jurisdiction. Said, the governors can go do their own thing. And then you had 50 governors out there trying to get supplies, testing supplies, and other supplies. And they're still bidding against each other in FEMA. And no wonder why there are major shortages and the price got bid up. And it was terrible. But at this point in time, the governors got this on their own. And the federal government's just doing a cleanup at this point in time of the mess that they left. And they're doing that with the 3 bills that they've passed so far. And they're not doing what they need to do. But again, The bills are out there. They've made some impact, but that's the best the federal government can do right now. They screwed this up to begin with in January, February, and early March. Okay. And now they're just trying to clean up a little bit of a mess. And you get the stimulus packages out there that they're still not getting to the people that actually need them. The national shutdown that the president called for right now is just a matter of history. Now, unless the current cases and the deaths more than double, unless they actually more than double, there's almost zero chance of seeing another federal shutdown. Okay. The administration, as well as most of the country, really has no appetite for it. So is it really up to your governor to protect you at this point? How honest are they with themselves and with their constituents has yet to be seen. However, most governors seem to have the people's best interest at heart. We'll see what happens as the number of cases start rolling up. Now, they'll do what they can on the macro level, and that's what they do. As government, that's all they can affect is the macro level. However, okay, they still can't do much on the micro level where you live, in your house, at your kitchen table. That's really still up to you. It's always been that way. The government shapes policy on the bigger aspects of things, but day-to-day living in your house at your kitchen table is all you. Okay, they can't really do much about that. Now, as I said in the beginning when I started doing these shows back in March 20th, most all of us will make it through it. And most all of us are making this through. And life will go on. Life continues to go on as we're here. Even in the darkest hour of things, life still continued. It doesn't stop because bad things are happening. Now, if you had problems before all of this, okay, back in last year, if your money was tight then, okay, if you were thinking about retiring then, and you thought, well, I know I don't quite have enough, but if I keep doing this, I'll be okay. Well, surprise, the last 5 months have really focused the spotlight on the problems you had before and really intensified their existence. Okay, as of December, if you were hoping to retire at some point, you're still hoping to retire at some point. Only now you're 5 months further along, and there's less opportunity to do what you were doing before, which wasn't quite enough to begin with anyway. So you have a really, really, really short window of time that you can do anything to make any substantial difference to get you a reasonable lifestyle and not have you need to be working well into your 80s if your health holds up that well. Now, most financial planners, they're still very, very willing and eager to sell you more mutual funds, life insurance, and annuities. They are. It's what they do, so they can get a commission. Now, they know those things are going to have little to no chance of making a real change in your retirement situation and the outcome of it. They know that. And the more honest ones will actually tell you it's just too late for you. And you may be hearing that from friends, family, and coworkers too. They'll tell you, well, at this point in time, there's really nothing you can do but just cut back your lifestyle and keep working. That's what you're hearing a lot of. And I'm here to tell you it's not too late. For you, if you're listening to this, it's not too late. I was just talking to a guy, nice guy, Randy, about an hour ago before the show. Okay, he doesn't want much. Okay, he's been working at the same job for basically 40 years. One of the few people who can actually say they've done that, because most people end up changing jobs a dozen times before they hit age 50. This guy's lucked out. Works in a small town, basically, at the same job for the last 40 plus years. And he's done okay. He's got some savings off to the side, but he knows he needs a little bit more. He needs just a little bit more cash so that he can just spend some time fishing and hunting and playing with his grandkids. That's all he wants to do. He's not asking for a lot, just a quiet, simple life. And he's been looking at things for years. He found me on YouTube. Okay. And he's been following me for close to a year. That's what he told me. I didn't realize that, he was out there, but he's been following me for close to a year. Seemed like a nice guy. And after the call, I invited him into the program. I showed him how he can get control back in his life and get the cash flow he'll need, okay, to retire in just 3 to 5 years. never have to worry about working again, because especially you hit 50 and 60, okay, the companies aren't that interested in keeping you there anymore. They're trying to sideline you to begin with. And most people have felt that. You get pigeonholed and they try and move you out. But I invited him to the program, and he should have sufficient cash flow in just 3 to 5 years to more than make up the money he's making right now, but never have to worry about working again. Now, I can't help everyone. I'd like to be able to, but I can't. Okay, I'm retired. Okay, and I do this to amuse myself in my retirement, my way of giving back to helping the people I've been working with for the last 40 years, which is select individuals and small businesses with 0 to 6 employees. Okay, those are my people. Those are the people I've been working with. Okay, I don't work with the people at the 2% at the top. They're not my clients. They've got more of an attitude thing that I need, and I don't deal with it at all. But for those people, my people, there's a chance I can help you. Go to my site, drrousenow.com. Okay, there's a 12-minute video there. Explains what the program is that I invited Randy into. Okay, take a peek at the video. See if you're interested. Schedule a call. Okay, we can at least talk. You can't buy anything on the phone. Okay, you can't buy anything on the call. The only reason for the call is just I want to see, do you really have a need or not? If you do, can I actually help you or not? And third, do I think that we can actually work together? Okay, yeah, that's important to me. I can't work with everybody. I'm 60 plus at this point in time, and I'm really selective about who I spend time with, as you should be at your age too. So do that. We'll get on a call and we'll see if I can help you or not. Okay. And if I think we could work together. Now, I'm Dr. Fred Rouse, the Real Money Doctor. Okay. My only goal is to help you get, protect, and enjoy your money, your life, and your retirement. Now, I appreciate spending the time with you. These shows are definitely a labor of love for me. It takes me a good bit of time to prep for these things, do the research, and get this all ready for you. But I don't mind doing that. Okay, you need to know what's going on in the world and how it really affects you. And I'm hoping that when I come on, I can explain some of those things to you in ways that make sense and see things that really affect you, and some things that just don't affect you at all. So again, I enjoy spending time with you today. I look forward to spending some more time with you tomorrow around 7 o'clock. Thank you.